Okay, today we are going over why you should buy Google even though Netflix is the better stock. A reminder that most active funds do not beat the S&P 500 long term, and to always do your own research. Google has a strong buy from analysts right now. The one-year forecast is just 4%. Same with ours is 4.4, and we are a buy. But Google has beat 3 of their last 4 earnings calls, and they are looking like they're picking up momentum on that. One of the best product moats in the world. This is the single best reason Google search still dominates in the industry and is holding onto its market share over time. Very, very strong moat there. Probably the best in the world. Decent growth forecasts as well, about 6% year over year for earnings. Pretty impressive given their market cap is almost $4 trillion and is 10 times that of Netflix at about $400 billion right now. Very diversified product mix. We're seeing a lot of different products from Google, a lot of AI investment, and that's going to lower the risk, and they've started building a dividend history. This is something I don't see anybody talking about. Google has started to mature as a tech company and is starting to really embrace its blue chip roots and really build that dividend history, and I think we're going to see that continue to strengthen over time. So we've put this as a low risk, medium reward stock, and we are a buy on Google. But here is why Netflix is better, but why you shouldn't buy it. Netflix has an average analyst rating as a buy. Their one-year forecast is good at 48%. Ours is 18%. We're a strong buy. That's very strong. 16% year over year is what I'm seeing for their subscriber growth this TTM, trailing 12 months. Currently about 301 million paid subscribers. Very impressive. But the problem with Netflix starts there. The insiders are mostly selling off the stock right now, and it seems like they've missed a couple earnings lately. But here's the real problem. Competition in the streaming space is piping hot right now, and they are losing market share fairly rapidly year over year, and they're just not that diversified. They don't really have anything going on outside of their streaming business, and the sources of revenue that they do have outside really heavily rely on that streaming and their subscriber rate. So the fact that they're not able to hold on the market share is not a great sign, and there's also a rise in piracy as well. So we've upgraded the risk of Netflix to medium. We've put the reward as high, and even though we've put this as a strong buy, there's a lot of headwinds coming for Netflix, even though it does have a lot of great potential. You know, being 10 times less expensive, or from a valuation standpoint, is Google. That leads to more growth opportunity, and I think we're going to see some of that, but it just comes at quite a risk, especially given that sliding market share. So that is why you should buy Google over Netflix, even though Netflix is the better stock. Google is lower risk, medium reward. Netflix is more of a high risk, high reward play right now. So please drop a like, click this link for more content, and I'll see you next video.